To revive the stock market, the Chinese financial authorities introduced the series of policies, including lowering the stock transaction stamp duty for the first time in 15 years. But a huge amount of money was withdrawn from the Chinese stock market due to concerns about the recession in China and the conflict between the United States and China. In addition, the 홍콩 H Index HSCEI has plummeted over the past 3 years. Investors in equity-linked securities, ELS, using this index as their underlying asset, have entered the range of losses in the trillion of won range. As the Chinese stock market has recently fallen, large losses are expected for investors who invested money in equity-linked securities, ELS, products that use the 홍콩 H Index as the underlying asset. Bank ELS alone maturing between January and June, the first half of next year, exceeds $1 trillion. So if the current stock price trend continues, trillions of won could be lost. ELS is a high risk over-the-counter derivatives product. It was popular among investors during periods of low interest rates, in particular the case of index type ELS. There were no losses for a relatively long period of time before the pandemic. The rate of return is also 1 to 2 percentage points higher than the deposit interest rates. So not only high net worth individuals, but also retirees rush to put in a dump sum of money. ELS is a derivative financial product whose rate of return is determined by the stock price of the underlying index or a stock. Typically, the price of the underlying asset is evaluated every 6 months, and if it remains above a certain level, early repayment is made according to the promised rate of return. However, if the price of the underlying asset falls below the loss threshold, principal loss may occur at maturity. The maturity of ELS is usually 3 years, and if the price of the underlying asset falls by more than 40 to 50% compared to the time of issuance, it enters the principal loss login section. However, as global stock markets have recently fallen due to high interest rates, investment risks have increased rapidly. Since 2021, when ELS products linked to the 홍콩 H Index were sold, the 홍콩 H Index has plummeted by about 40%. The 홍콩 H Index, which existed the 12,000 mark in February 2021 fell to the 8,000 range at the end of the year, and has recently been fluctuating in the 6,000 range. The HongKong Index has fallen more than 11% this year. Considering that the maturity of ELS is usually 3 years, it is expected that ELS investors will suffer large losses starting next year when the Hong Kong Index linked ELS sold in 2021 expires. Although there is still time until maturity next year, experts believe that principal loss will be inevitable considering the global economy, interest rates, and stock prices. At high interest rates are likely to remain until the first half of next year, it seems difficult for stock prices to achieve the dramatic rebound. Rather, if additional variables such as a rise in international oil prices occur, stock prices may fall more sharply. Among the Hong Kong H Index ELS sold by the 5 major commercial banks, KB국민, 신한, 우리, 하나, and NH농협 on November 26, the amount maturing in the first half of next year was calculated to be approximately 8.41 trillion Korean won. If the current stock price level 6,041.15 on November 23rd, which was helped the H index from the February 2021 high point 12,000 levels, is maintained next year, a loss of more than 3 trillion won may occur. The size of the bank ELS maturing between January and December, the second half of next year, is 3.9219 trillion Korean won. The balance of ELS sales at securities companies is also approximately 3.5 trillion Korean won, so the loss could be even larger.